Oh, hello everyone, and welcome to this afternoon for us here in the UK, the session where we're going to be looking at day trading stocks and also the indices and probably some commodities as well. But we're going to start with stocks first. But as always, before we do start, can I just draw your attention to the disclaimer that I know you can see on your screen? As you know, trading it can be a very risky business, so please don't ever think of using money that you cannot afford to lose. A quick whiz through how we are going to look at stocks in terms of technical analysis. Well, we're going to use volume price analysis, which is this intimate relationship between the price action and the volume to tell us what is going on, but much more important, what is likely to be happening next, which is, as a trader, that's all we really want to know. And details of the concepts of VPA you can find on Amazon. This is the first book and the principal book. What we've also done is we've put together lots of worked examples of the methodology applied to stocks, some commodities and some indices as well, which is the companion book to the VPA book. There's also a Forex market example, but to be honest, the worked examples, they're applicable to any instrument. If you've got a price, you've got a price chart and you've got volume, you can sort of learn to read it. And the great thing about it, with these sort of, you can call them signals, setups, patterns, combinations, if you like, of price action and volume. The great thing about them is they repeat. They are, once you get to know one signal, one setup, you can be sure that at some time in the future the same will recur. So getting to know the worked examples is a really good way of learning the methodology. VPA, that's the price action and volume, clearly hugely important, but we use candles and candle patterns, and we also use support and resistance. We use price-based support and resistance and volume-based support and resistance, and we've developed some particular indicators to help us display those important levels on our charts. But you can add your own. You can add the standard ones that come with your platform. You can use moving averages. We haven't got a VWAP yet. It's something that we're looking to develop. In fact, we're looking to develop more volume based indicators based on VPA, but certainly you can use all the, whatever indicator is on your platform. The important thing is to know in what market condition to use it. What is that indicator been optimized for? The simplest one is the moving average. The moving average is a fantastic indicator. Whether you use a simple, exponential, fractal weighted, whatever version you like of a moving average, it works perfectly fine in a trend. But when the market is in congestion, a heavy congestion, maybe a volatile congestion phase, it doesn't work. But it's not because it doesn't work. It's not designed for that. You have to wait until there is a breakaway from that congestion, and then you get the start of a trend. Now that also is kind of part of the VPA methodology, is understanding that what you're looking at in terms of the chart. Are you looking at an instrument that's in a trend? Is it in an accumulation phase? Is it in a congestion phase, and it's basically not going anywhere? So it's, as I said, indicators, sometimes they get a bit of a bad rep, but it's not so much the indicator, it's the inappropriate application of them. But once you understand the basic structure of the chart based on, as I said, this chart structure, price action, supported by the volumes, support and resistance, the candles and candle patterns, it certainly becomes a lot clearer. We've added to that, we've developed our own, and you can see them on our charts, how we use them. As I said, very much weighted to extracting as much data and information that we can from volume in its various iterations. So that's what we're going to look at today. Now, those of you who've have been coming along for the last 2 or 3 sessions will know that the big issue with day trading, certainly stocks, is what do you trade? Where do you start? If you haven't put together a little watch list or a portfolio of stocks that you like to trade, and we covered this in last week's session, and I also mentioned it in last week's session, is that once you understand a chart, in the sense of, is it in a trend, is it in a congestion phase, you as the trader, you can then you can develop a series of tactics. It's all explained in our Forex program, but it applies equally to whatever you trade, in as much that, do you develop one or two tactics? And by tactics, I mean reversal trading, let's call it swing trading, breakaway trading, whatever. Do you then really develop a skill in those, looking for those setups that will allow you to apply those tactics, and you simply wait until the chart is in that position, basically, for you to take the trade? Or do you sort of say, actually, I'm going to take it from the chart perspective. I really like to trade Apple. I mean, Apple is I know everything there is to know about Apple. I know when Apple moves. I know when Tim Cook goes to bed. I know when he has his breakfast. I know what moves Apple in terms of the price action, the fundamentals, the market news. You've really got to grips with something like Apple. And of course, the chart will do what the chart will do. It could be in a trend, it could be in a congestion, and we've got different time frames. But so much about Apple that whenever it pops up, you can instantly, first of all, identify what is the structure of the chart, what is happening on the chart, and you trade accordingly. You apply. You will often see this marketed as saying, learn one technique and apply it to everything. Well, I wish it were like that, but it doesn't work like that. So getting back to this selection, last time we looked at sectors, and we looked at, do you select from the sectors that are very strong, there's a lot of buying going on, so you find a list of stocks in that particular sector. And again, it goes back to your tactic. So do you like to look maybe for a reversal, or you like to fade a move, or are you looking for something that's reached a top maybe and you're looking to sell? As I said, there's lots and lots of combinations, but you as a trader, you have to find what is comfortable for you. So let's go back to this stock selection. We didn't talk about the pre-market last time, so I just want to highlight a few things about the pre-market, and just to give you some resources again that you might like to explore and kind of play around with if you haven't got your little portfolio of stocks together. Before we go, actually, as Janice has popped up, her little face has popped up there, you'll probably realise that she really put her foot in it yesterday, or in fact more than her foot. She stomped all over. She stomped all over, Jay Powell. I mean, I don't think in all the years we've been trading, I don't think I ever remember a Treasury Secretary coming, with their own opinion about interest rates. But there we are. That's that. She's accredited for really sort of tipping the market over. Yesterday, it had a fantastic start on Monday, and then it all had a bit of a swoon with her talking about, dare we say it, interest rates. Which actually brings me to another point. Again, I know I keep comparing everything to our Forex program, and one of the reasons we put the Forex program together is, yes, technical analysis is hugely important. You have to learn the chart, learn the methodology, use your indicators in the correct way, etc., etc. But a chart doesn't move in a vacuum. It doesn't move in isolation. It will be impacted by comments from the Federal Reserve, comments from Janet Yellen. It will be impacted by fundamental news, by where are we in the business cycle, where are we in the economic cycle, and there's a third aspect to it as well, and that is it the chart may also be impacted by what we call related markets. So if you have a stock that is sensitive to interest rates, which tech stocks are, the idea that interest rates will go to 2% and swoon maybe to 4%, that's going to rattle. Pick the word up from there, and Yellen rattles the market, will rattle certain sectors and certain stocks. And putting this knowledge together so that you become what we call a complete or a rounded trader. But as always, we start with the chart and what are we going to look for in potential trade today. Before I just do that, I'm just going to check what the fundamental news is. And I think today, we've got the ISM, which I think has just happened. Forex Factory is a bit delayed, so let's go over to Financial Juice, and they don't credit the ISM with a red star. Here we are. The ISM has actually gone down slightly, which is interesting. 62.7. It's come below expectations. Services index, well, they say 62 versus 64.5. There is another site for fundamental news. I mentioned it this morning in our webinar. It's called Trading Economics. I will pull up the URL for it later on. It's a fantastic site, and it really is a great site for you to sort of get to know what all these fundamental releases mean. And of course, that is without the fundamental releases for the fundamental metrics for the stock itself. But we will be doing a little bit on the metrics that perhaps we think you should consider when you are looking to, just as part of your general background in knowledge and information to the trade, to the stock that you want to be trading. And it doesn't matter whether it's whether you're going to be holding for a few minutes or you're going to be holding for a few hours. It really helps to have, as I said, this rounded picture. Right, now, pre-market. In my research, I've been obviously the information to what is going on in the pre-market. Obviously, you can pay for this, but if it's not available on your platform and you're not in a position to invest in buying additional information and data, what I've tried to do is find actually where you can basically get it for free. And this one it's investing.com, and you can see from the URL up there, it says equities / pre-market. And it's a very simple, it just very simply tells you what have been the most active stocks in the pre-market. Now, the importance of the pre-market is that I know it is possible to have access to some of these stocks. You have to find a broker. From reading around it, I know Ameritrade offer access to the pre-market, but I'm not suggesting you consider trading the pre-market, but it's important to know what goes on in the pre-market, because, and particularly the kind of volume that is driven into the pre-market. Is it a lot of volume? Is it not very much volume? Because it will two things it will do. It will sort of set the stage for what might happen in the actual market, which we are in at the moment. And also, once you get to know what the kind of average volume for a stock is on a daily basis, and there is a metric for that you can we will cover in another session. If that's all kind of used up in the pre-market, is there going to be much movement in that stock? So it gives you answers, the pre-market, but it also highlights the questions that you need to ask yourself when you're looking at the chart. So, it'll give you some answers, but it will also tell you what are the questions that may be coming up in the session, in the actual physical session. And what we haven't touched on, and we will touch on a little bit more in more detail in subsequent webinars, and that is also look at what the general market mood is, in the sense that we can see the futures, the US 30 futures, they're slightly down. I don't know what the NASDAQ was up quite strongly in Globex, but that's coming off as well. That's the same one, NASDAQ futures, here we are. because as I said, that was up, it was up very strongly, the NASDAQ. Have an idea if your stock is part of, say, the NASDAQ, whether how is it moving in relation to the NASDAQ? Is it outperforming it? Is it underperforming it? And also, what are the key levels for the indices? Because everything is related. As I said, nothing moves in a vacuum. Right, so investing.com with the pre-market, these are the list. I had a very nice tweet from someone who follows me on Twitter, who basically had picked up a couple of really nice trades yesterday. One of them was on this Co-Crystal Pharma. The other one isn't up here at the moment, and he just tweeted to say that it provided a really nice trade. I don't know whether he faded it or whether he actually joined the trend higher. We didn't get into that level of detail, but then by looking at the pre-market, he's deliberately selected, and then the VPA came in with the volume to support the move. It actually went both to the upside and the downside. So this is what's been going on. Right, next stage to this process is, this is what I suggest, is okay, we know this is a pharmaceutical company, but have a look at the volume. This is enormous, Farmy Inc. I mean, there's 20 million there. I mean, it's just extraordinary. But the one I had a look at with this one was Chiasma Inc. There was 7.21 million. And I really want to know a little bit more about it. And this is where we go to one of our free resources, which is FinViz. Because what FinViz is very good at, when it loads up, if you bear with me a second, there we are. What FinViz immediately tells us is basically which sector, healthcare, biotech, and in fact, it's actually shot up, as we can see here. And that's having that information on the pre-market. What FinViz also does, it gives you, it's the only one I've seen which does this in a very compact way. It gives you all these metrics. It gives you the fundamental metrics. It gives you whether it's the stock is optionable, whether it's shortable. It also gives you what the average volume is, and certainly for trading, I would say really you want to be over 500,000 as an average. You really don't want to be below that. Not because you can't trade it, it's because you get even more volatility. And on the fundamental metrics, if you were looking at this stock for an investment and you were being very, very strict on the fundamentals, I don't think you would probably look at it, because these metrics are terrible, David. Have you seen them? Return on investment, return on return. However, you could argue, well, when Amazon started, their fundamentals were terrible. Maybe some of you don't remember, but when the market's saying Amazon, you don't want to put your money in Amazon, it's a terrible stock. Look at it, they don't make any money. Well, look at where they are now. So fundamental metrics are certainly useful, but you have to apply them in the correct context, as it were. But it's useful to have a background. What's nice about FinViz is it gives you all these sort of headlines drawn from the media, just to tell you what's happening as a kind of background. And if you recall, 2 or 3 weeks ago, it was on one of the headlines for AHT that I said at the time, I said, oh, this is interesting. It actually said, if you were to bring it up here, back on the 30th of April, 7th of April, 21st of April, oh, sorry, 7th of April, it said, our options traders betting on a big move in Ashford Hospitality. And those of you who came on last week will know it took a bit of time, and we'll look at at how I set the charts up for AHT on NinjaTrader. So we'll have a look at that as well. Right, to get back to CHMA, from here, what I then suggest is we go to Market Beat. Okay, market beat. In fact, I've got Ashford Hospitality here, but it doesn't matter. The principle would be the same. But have I got it? Let me see. Let's see if I can change this. Hopefully I can, because I just want to quickly whiz through the metrics that I want to move on from. Here we are. Where are we? Where are I say CHMA? Right. Okay. Hopefully it'll come up, because we didn't look at. Hopefully that. Here we are. There we are. We've got the same one up. And I want to go back to AHT, because there's a couple of metrics on this tool. What do you call this, Dave? The toolbar, isn't it, at the top here? I can't remember what it is. These tabs up here that are really, really interesting, and in particular with AHT, to give us an indication of where we think the AHT is actually heading for, based on the options, basically. Right. So this is the chart for. As I said, chiasma or chiasma. We can look up what the short interest is, and basically see what the ratio is. Let's have a look. This is the days to cover. So if it was, if the shorts are going to get hammered and they have to cover, then it will take them almost 2 days to, it's not that bad, basically. But in terms of shortable, what is the shortable chain? The percentage is 5%. I don't know. It seems quite a lot to me, actually. 5% of the shares shorted. So maybe the shorts, it is actually a squeeze that we are looking at. So it's just another one of those little bits of information that you can put together. Now, the question now is, with this particular stock, given that it's had this massive injection of volume to the upside, and this candle that's here is probably a volatility candle as well, what do you do? Do you say, oh right, it's had a big gap up, I'm going to follow it up, or do you say, I'm actually going to fade that? And there are traders, I've come across one or two who day trade stocks, that's all they do, they fade, they wait for these big gaps, because traders will suffer from FOMO, the fear of missing out. They all jump in, they all pile in, and then the thing collapses like a souffle, and he's quite happy to be a fader. So he's got a tactic. That is, his tactic is to fade, and this is what he looks for. He looks for big gaps, big volume, and sometimes it comes off, sometimes it doesn't, but hey, that's what suits his personality and his his approach, basically. Go back to AHT. The reason I wanted to, before we go to AHT, let me just come up here. Let's have a look. Right. There is another nice bit of resource on Market Beat, which I came across, and it's the largest short interest positions. Now, that's of the 14th, so I don't know when that is going to be updated. I think we possibly have to pay for the most up-to-date data, but I think I'm probably going to subscribe to Market Beat. I haven't decided yet. And let's have a look. It's got a more up-to-date one. No, that's the latest reported date, and it's free, so we have to put up with it. But it's quite interesting to see, these are the largest short positions, because obviously funds and what have you, big traders, if they take a short position, they have to report it. I don't know how often they report it, but they can't hide it anymore. They have to say they're short. And this is another way of looking, where possibly are any of these stocks going to be subject to a short squeeze? In other words, it's what's happened to GameStop, basically. And you would then go back to, you could put one of these in, go into FinViz, see where they are, look at the sector, look at the metrics, and go into the individual stocks here, as we have here, see how many days it would take for a short cover, as it were, for covering, and that would give you, oh well, it might be worth having a, looking for that opportunity when the shorts are going to get squeezed, and you're going to take a trade to the upside. Right. The other metric I want to highlight today is actually the option chain. I'm not going to go too much into options, but what I'd like to point out, especially if the price is anywhere near one of the strike prices, and what the open interest is. I'm not going to talk about delta. I'm not going to talk about implied volatility. That's, you know, we will touch on that in later sessions. What really interested me about this one, and said about potential targets, where, you know, what are other traders thinking about this stock? You have to remember also, Ashford-Lee's in the hospitality business has had it was absolutely slaughtered last year with, you know, all the hospitality, leisure sectors have had a really rough time, obviously with the pandemic, but obviously, you know, with things opening up again, traders and investors are seeing, well, you know, time for things to get better, as it were. But this strike price caught my eye. It's the $5 strike. It's not too far from where we are at the moment. The expiry date is the 21st, so we've got a couple of weeks, just over a couple of weeks, and it's got a very high open interest, and we can see it's 23,000, and it's also added another 5,000. So clearly, traders out there are, you know, they're pretty bullish on this stock. And you know, so you think it's this kind of information that, you know, it's just another piece of that puzzle to help you with the stock itself. Right, now let's go and have a look at the actual stock itself. Now, what I've done, two things. If you've never day traded stocks before and you haven't got a platform, and, you know, you just want to sort of see what it's like, I haven't had time to do it today, but I have an Mt5 platform, which is also available to download for free directly from MetaQuotes. They have a very, very broad selection of stocks. I had a quick look yesterday. In fact, the one I picked up was Duke Realty. I couldn't believe it. And it was just the MT4 and MT5 are fantastic platforms. They're so easy to use. The volume is brilliant. The volume display on the platform is fantastic. I will do that next week and really come back to a point where, if you're thinking of stock trading, or you want to practice, or you just want to sort of dip your toe in and not, you know, get too heavily involved with it, with other, you know, platforms that you may have to pay for, MT5 is absolutely fantastic. And when you see it and how intuitive it is, and it's also a great way to learn VPA. It's, as I said, the platform is very, very easy. Right, what I've done is I've actually got 6 charts here for AHT. I've got a minute chart, I've got the 3-minute, I've got the 5, I've got the 60-minute chart, I've got the daily, and I've also got a Renko up here, because when you are trading on these fast time frames, what you might want to consider is incorporating a non-time-based chart into your analysis. Now, we've developed a couple of indicators that allow you to do this. One of them is using Renko. And as you can see here with Renko, by the way, means brick in Japanese. This is from NinjaTrader, and this is what we call our optimizer. And what the optimizer does, it automatically gives you the brick size. What's cool about Renko is it basically takes away all the volatility, so you get a very geometric look at the price action. You can kind of see the trends, you can see the congestion phases, you can see the choppiness, and this is very choppy at the moment. It's also not moving very far, because this isn't based on time. One of these bricks will only go through once the value of the Renko has been completed, and it's a very low value at the moment. The way you look at it is you can set up, you don't use long time frames. So for example, if you have, let's say, the 30-second chart, so you hit the 30-second chart, and what it comes down here, it will say, well, this is the optimal bit. It's actually still 2, that's fine. So we go in there, it comes out. This is a very, very choppy chart. So, you know, you might want to think, well, you know, nothing's really happening with AHT at the moment. And the reason why nothing very much is happening on AHT, we only have to look at the daily chart. if you recall, those of you who came along, we were looking at it when it was falling. I said last week it found support at volume support and a potential for, you know, it's sort of little U shape here. The volume on the down candles, I know it's all distorted by this one, but the volume on the down candles is very low. So clearly it is, you know, it's reaching a kind of bottoming out. Then we had this injection of volume, and this had this big candle here, which was a volatility candle, not a huge amount of volume, but enough to push it up. But because it triggered the volatility, price action was outside the average true range. You had this retrace into the candle. Then you had, again, not a lot of volume underneath it, but it did have a wick to the bottom, which kind of pushed it up higher. Again, another injection. You have to remember, these are 40, no, we are talking in millions here, and it's distorted all this other volume, you know, preceding it. This was really the big one here, where we've had the gap up. But again, because it's on a volatility candle, what tends to happen, it retraces to within the spread of the candle. And in fact, yesterday, although it's got a wick to the bottom, it kind of stopped at the volume point of control. Now, the volume point of control is that point on the chart where there's no real decision as to which way it's going. It's kind of had this push up on good volume, but now it's kind of collapsed back down on itself. And what we need to see more volume coming in if this is actually going to make this $5 call that we've seen on the options chain. What we've also developed is something called a tick speed. Now, what the tick speed does, speedometer, is it measures activity. And if I just let's pull up the 3-minute chart, which is a little bit, right. I just run it. You can run this indicator in, you can use it in a number of different ways. The way I like to use it, it tells me if there's participation activity. When it's in this red and orange, there's really not a lot going on. So if you were thinking, you know, no matter what all your analysis says, you were thinking you're going to take this, you know, trade this thing, there's really not a lot going on. You can see that the surge that you get at the open, of course, you always do. So this is green, so that tells you there's lots of activity. It's just another way of trying to get behind what is actually happening with the price action. Now, the other levels I use on here, there's our own accumulation and distribution, and we use our Camarilla indicator for price-based levels. And the third level is actually really, really important. And what's interesting about the AHT today, it's actually, these are today's levels, not the weekly levels. It's very neatly sandwiched between the R3 and the S3. So if this is going to swing one way or another, it's going to swing between these 2 points. But at the moment, as you can see, it's just going sideways. It's going nowhere at the moment. So it's moved to the upside, certainly happened in these explosive candles. I wouldn't say it's a complete fade, because as I said, the call options are, you know, there's very high, not to say options traders, you know, are the be all and end all of what is likely to happen with the stock. But it's just interesting. And also you can see by the price action, nothing's happening. So you think, okay, that's interesting, but it tells a story. It gives you a narrative. It also tells you what not to trade. Now, I am just going to input the chiasma. Let's just check what the, go back and check what the, because this is quite interesting. Let's have a look. Where are we? CHMA, here we are. Let's see what this candle looks like on the daily chart. CHMA, let's have a look. I've got them all linked up. Now you might find some of the volume point of control histograms are all over the place, because there's been such a rush up. There's a huge amount of volume going in. There we are. There we are. Let's have a look at the daily chart here. Right, there we are. In fact, it hasn't produced a volatility candle, but I would say it's certainly on its, you know, it's pretty close to a volatility candle. And what's interesting, this is where, you know, if you'd looked at the daily chart here, you've got this really nice volume support here that's derived from the volume point of control, and it's actually done it in one fell swoop, as it were. So it's now around the volume point of control. Is there an opportunity to fade this? I think there's more indecision on this one. I think it's a case of being patient and seeing how this plays out. If we go down to the 1 minute chart, yes, it's exactly at the VPOC here. Again, the momentum, it's come in and it's sort of died down. You can see the extent of the gap up. This is all absolutely squashed to bits here. You can't see it. Just going to check what the levels are in terms of price-based levels. Oh, what happens with the daily levels? They're just meaningless now because it's been such a huge price move, and even the weekly ones are no longer applicable. If we go over to the Renko, I'm just going to change this to a minute, see what happens. If I get another value, let's have a look. Let's have a look, 10, quite slow. Let's have a look. I don't think I've got enough data on this one. That's fine. Let's have a look. Let's go to 30 seconds and see what happens. Let's have a look and see what it is. No, I don't think I've got enough data. The Renko is really useful because, well, it's useful for a lot of reasons. You can use it for entries. You can use it for staying in. You can use it for, I don't tend to use it for exits. I tend to go back to the time-based charts for exits. But what it is particularly good at is, I don't know why is this all gone? This is funny, David. That's probably my. So let's go back to 30 seconds here. There we are. There we are. What it's very, very good at is telling you if you are in a choppy market. If you're in a choppy market and you're stuck between levels, there's really, unless you're going down to tick charts and seconds chart, most traders, most day traders trade minutes, minute time charts. What it's very good at telling you is there's really not a lot going on at the moment. Right, that's what I want to finish off today. If you've got any questions on what I've said, please just put it in the chat box. I will actually get to a point where I will summarize everything that we've been covering in the last few sessions, as I said, and we will come up with some kind of, if you like, flow chart for what you should consider for stock selection, but that's going to be a little way off, simply because there are other aspects that I want to cover before we get to that point. But if you've got any questions, just pop them into the chat box. I'm looking at AHT. Let's have a look at the minute chart. What's that? Well, what's interesting is it's actually broken through the support here that you can see on the accumulation and distribution. It's down to the volume point of control. So this is nice to see. There's some there's some green coming in. So there's obviously some activity picking up. Now, if you were thinking, okay, I'm going to, I think there's a pullback and a correction, possibly a tradable one. The next question is, well, where is it heading to? And you look down to your next support level on the volume, which is down here at 288. So that's really how you look at these charts. This moves all the time. This is dynamic, the volume point of control. So it moves as the volume builds up. This is volume and price over time. Right, I'm just going to pass over to David, see what he's been looking at, and as I said, if you've got any questions, just pop them into the chat box.
Thank you, darling. Hopefully you can see my screen and hear me okay. I've actually remembered to switch my microphone on, which is a minor miracle. A number of times I've sat here talking to myself and no one's actually heard anything, but there we go. Yeah, I've covered all the questions so far. I think, let me just double check. Sorry, I normally have the chat box closed. Flowchart would be helpful. Yep, no problem, Chris. One of the many things we're working on at the moment. Just slide that out the way. There we go. Where to start? I've got my eye on a lot of things actually at the moment. The dollar is, well, let me just pull this over. This is on TradingView. I've got the Dixie up here. There we go. That's what the Dixie is doing at the moment. If you were with us this morning during the Forex session, we had this terrific move lower, pretty much across the majors. And then as we were closing off, I said it's coming down to a potential congestion phase and a potential reversal as well. All the indices, all the currencies rather, were strongly overbought and strongly oversold. And that indeed did come to fruition. So we had this decent rally. We started to see the beginning of that, and now that extended right the way up here. Now what we're doing is we're in congestion. As I say, this is on 5 minutes, so that's what the dollar is doing. I've got the Dixie up here. The VIX up here on investing.com. Just keeping an eye on that. It's spiked up. It's starting to come off a little bit, which is why you're starting to see this minor correction here. We've had a reasonably bearish price move, as you can see, since the open at 230 over here. Surge in volume as always, lots of volatility. It's what you come to expect. This is basically the three indices, the three sisters, the three primary indices. This is the YM for June. This is the NQ. This is the ES. So we've got the Dow, the NASDAQ, and the S&P 500 on the top line on 5 minute. And this is where we are on the daily for those three equivalent. And basically, this is the price action we saw yesterday with Dear Janet. Big move lower, followed by recovery. Certainly in terms of the Dow, at any rate, it got back to close. Excuse me, it got back to close above the open. The NASDAQ, not so. That has been, we did a post about this, I think it was end of last week maybe, about the 14,000 level and how significant it was, and it really cannot get through that level. Once it gets to that level, then it's off and away again. But that was the reaction yesterday. Lots of volume. Yes, there was a certain amount of buying coming in later in the session, but not enough to really sort of reverse it. And given what the dollar's doing at the moment, there's still a lot of uncertainty over what she said, and the reverberations of that continue for the time being. As you can see, the NQ is trying to rally there, but looks really weak. And similar sort of picture on the S&P 500, reaction lower, some buying in there. But again, it's really struggling at the moment, certainly from an intraday perspective. If we go over onto the multiple time frames for the YM, I think, yep, June contract, there we go. That's what we've got at the moment in terms of the YM. I've got 15-second, 1 minute and 3 minute along the top line, 5 minute, 10 and 15 minute along the bottom line. Just see where we are in terms of what is going on. A little bit of buying coming in there, the volume's increased. So, a certain amount, but the issue, as far as I can tell, obviously looking at the 3 minute, see where we're going there. Look, these volatility triggers, expect to see them. This is the open for us. This is 2:30 our time, UK time. It does not mean that, and I've said this so many times, it does not mean that you cannot trade Globex when it's running electronic only. In other words, without the cash market in parallel. And I have to say, and a lot of people shoot me down in flames for saying this, but I can assure you, the trading Globex in isolation, the price action is a lot more straightforward, and it is far less choppy and much less volatile. And the reason for that is very simple, because this is the point at which all the trading algos kick in, and that's why there is always so much, first of all, increase in volume because you've got the cash markets open, but that is why you get so much volatility. And you only have to look up here at the chart, for goodness sake. You can see the sort of price action here. Yes, you get the odd volatility spike, but the actual price action itself is relatively smooth. And if you look down here at the volume, it's perfectly tradable. It's only distorted down to these small levels by the distorting effect of these huge volume spikes as the cash markets get underway. So please don't labor under the misapprehension that if you're in a part of the world where it's difficult for you to trade the cash markets, I wouldn't be too bothered personally. I mean, I trade the Globex only probably more than I trade the cash markets when they're running in parallel, purely for that reason. I accept that a lot of people will shoot me down in flames. They'll say that's absolute, whatever. We all have an opinion, and all I can tell you is from experience, that is what you see. And I can tell you from eyeballing that chart, that's the story it tells. And the only time you get extreme volatility on Globex is when you get things like Chinese news overnight, for example. That goes straight into Globex. And that's the other point about it. Globex is open 24/7. The cash markets are not. So when you get big fundamental releases, that news is already, if you like, it's baked into the price action. So, where is a better place to trade? Just my opinion, for what it's worth. That's where we are at the moment. In terms of where we're going to, if you're going to trade this as a potential reversal, To the upside, I'm just looking at the volatility index has now dipped below 19. It's on the way coming back down. It's down at 18.79. The dollar is coming off as well. So in terms of a potential recovery, it's good. Looks potentially a good opportunity to take a quick long position. As always, it's a question of, well, where is that? How much opportunity have I got before we run into potential difficulty in terms of the price action? And you're always looking at the price chart, and you're looking at it from the perspective of price-based resistance. In this case, if we're looking to the upside, and we're looking at volume-based resistance. So it's very clear to see in this case where we go. If we get 34,000, well, the major resistance is at 3404 or 3440, because that's where the volume point of control is. That's where we've got the heaviest volume on the chart itself. We've got low volume in this region, so we've got a low volume node here. So getting through 34, maybe up to 20, should be relatively straightforward, provided the volume is supporting that move. So a move through here should move through relatively rapidly, because the volume can be viewed on the histogram in exactly the same way as price. If there is a low volume region like you've got here, then the price should move through there relatively easily, because there is nothing in the way to cause a barrier to that price move. There, in these areas here where the price has settled for a long period and reflected in the volume histogram, that is where you've got a huge number of trades waiting to be executed, limit orders in there, all sorts of stuff. And the more nuanced view of the importance of levels is that if the market considered that an important level in the past, why would it not consider it an important level in the future? Now that's a more, I suppose, nuanced discussion, if you will, but from a purely technical perspective, in terms of the volume that is sitting there, it is absolutely layered with, you can imagine traders who got in there, they want to get out. That's what happens at these levels. And once the price action reaches that level, you can be assured of one thing: congestion. It's very rare that the price will just come up to one of these volume point of control areas and just go straight on in whatever direction it is traveling, for that simple reason. So from a trading perspective, it's always absolutely critical that you have charts up in your multiple timeframes, whatever they may be, whether you're on these sorts of timeframes, minute, 2, 3, whatever, or if you're working on slower timeframes. And the reason is because whatever it is you're about to do from a trading perspective, you will have a visual on where the price action is likely to pause. And the reason that it is so important to have slower timeframes is, as I've said many times before, is that time is significant. It carries more weight. Whatever you have on a chart, if you go down onto the 10-minute chart, this will carry more significance than a 5-minute chart. An hourly chart will carry more significance than a 30-minute chart. So whatever technical aspect you have on a particular chart, if you've got a VPOC on this chart 10-minute, that will be more significant than on a 5-minute, and hugely more significant than on a 1-minute. So it's all down to the relevance and the importance of the indicators, and having them in exactly the same way, using multiple timeframes, not only for trading, but also from an indicator perspective. Let's just pop this one up again, the 10-minute. We're looking at it obviously from a volume perspective. And when you look at the volume here, clearly at the open, we had a big surge in volume. It's what you expect to see, lots of volatility, lots of racking about within the price action. Then you get another volatility candle. What are you expecting? More congestion, more sideways movement, possibly a reversal. But what's interesting about this candle is you start to see the volume fall away. So at the very least, what that is telling you, just over 2 simple candles, is that the volume, the selling pressure, is falling away. And remember that whatever you're doing in trading from a volume perspective, if the market is rising, you expect to see rising volume. If the market is going to fall strongly, as we saw this morning in the Forex price cascade, waterfall cascade, on all the markets, you want to see rising volume. So if the market is falling strongly, you want to see rising volume. If the market is rising strongly, you want to see rising volume, because it takes effort to rise and it takes effort to fall. If you are not seeing volume rising when the market is falling, then it's not going to go very far because the selling pressure is weakening, and therefore you're likely to get either some congestion or possibly even a reversal if you've got buying coming into the market. And that's why we're starting to see this sort of price action develop here. I'm looking over on the VIX. It's kind of oscillating around 1883. It's not falling particularly strongly. It's just going sideways at the moment, and the dollar is starting to come off. So it's had a rally back up to 91.36, and it's now down at 91.27 odd. So that is coming off, and obviously, as I'm sure you're aware, dollar strength is not a great motivator in terms of equity strength. So it's not a relationship that you can say is cast in stone. But if the dollar is rising strongly, then it's not great for equities. Just one thing that I'm reminded of in terms of yesterday's price action, for example, which was very much driven by Yellen's comments. Of course, it's always easy in terms of stocks to think, well, the markets are falling, so all the stocks are falling. They aren't. I mean, yesterday, for example, you would look at financials, because financials would probably be doing much better than everything else. Others may be falling, but financials might be rising. So don't run away with the idea that because the master index, if you like, is falling or weak or rising very strongly, that all boats rise and fall with the tide. They don't. It comes back to sectors. It comes back to, what is the driver for that particular move. So that's what's going on at the moment, and it's just recovering, come off the bearish. We're starting to move into a little bit of bullish uptrend. Let me just hop over onto the run through the indicators here as well. This is on Renko. Anna mentioned it on her side. This is a particular layout that I use a lot. It's extremely powerful. The reason it's powerful, and you won't see this, or you see this rarely used by other people, but the reason we do it is because with the Renko optimizer, you have the option to attach it to different time frames. This is attached to the equivalent time frame below. So I've got the 15-second, we're on the NQ now. I've got the 15-second, I've got the 30-second, and I've got the 1 minute, which means that I've got my VPA analysis below. So I've got everything I need here in terms of volume, but I'm now trading on a non-time-based chart above. And all I have to do is just go into the 15-second, just click on that, wait for it to load up, and that will deliver the optimal setting for me. Just click here. So that's come up at 19. There we go. Just go over here. And by the way, that 19 is basically divide that by 4, because it's based on the smallest unit for that particular market. If we were on currencies, it would be in pips. You just have to do a bit of mathematics, but you'll see here that's basically how it works. So it's based on the smallest unit of price. So here it's 4 per point. Just drop down here onto 30-second. Just load this one up. This will be slightly slower. In other words, the brick size will be a little bit bigger because the time is slower. So we'll load that up. That's on 30. I'll leave you to do the maths on that one yourself. And then we go over onto the 1 minute. Wait for that to load. And this is basically delivering the optimal setting for the NQ on these time horizons at this particular point of time. Sorry, I probably clicked the wrong one. 1 minute there. Just wait for that to load. There we go. Well, it's very good. It's gone very odd. How peculiar. Never seen that before. There we go. But it is such a powerful way, because what you get, there we go, now it's loaded up. There we go, now it's loaded up. What you get is it smooths out the price action, and when you use it in combination with the other indicators, you've got the accumulation distribution on here, so you've got price, but the two most important indicators to use are the trend dots, this one, and the trend monitor, because the trend dots work very close to the price action. You can see, once the price goes into a reversal phase or a congestion phase, they start to change color. They go to gray or they go to red, and they also appear at the top of the brick. Then they start to come out the other side of the brick and become pushing up pressure, if you like. They sit below. And then down at the bottom here, you've got the trend monitor, which takes a much slower, considered view of trend. So the first indicator that changes are the trend dots. You can see it here, they change first. At that point, we are still in red. We come into the darker blue and out the other side into bright blue, and then they start to transition. And at this point, the two are obviously in tandem. But the reason this changes first is because it is very close to price action, and you'll see it all the time. It rolls over, it'll change color, but the trend monitor takes a more considered view of the change in trend. It looks at trend, it looks here and says, is this a change in trend? No, don't think so. If it thinks it is a change in trend, then you'll get a transitional color, and you'll start to go into these transitional colors of darker colors, darker red and darker blue, and out the other side. Doesn't always work in that particular sequence. Sometimes you skip one, you'll go from bright red to dark, as you have here. Alternatively, you might skip into dark blue and the dark red doesn't appear. But there are basically 4 color changes: bright red, bright blue, and the 2 darker colors that are between the 2 of them. That's on the Renko. Anna mentioned the tick speedometer. I've actually got that on a different setup here. Okay, we'll do. I'll get back to the questions. Sorry, when I'm in full mode, I have it closed down, but I will come back to your questions, I promise. This is basically what you saw on Anna's machine, where you had the tick speedometer, which is this colored bar running at the bottom of the chart. This is the way I tend to use it on for trading indices or trading commodities or stocks or whatever it is. I have 3 down the side here. Again, these are pretty quick. This is on 15 second, 30 second, and a minute. These are the equivalent down here. And what the tick speedometer is telling me is it's actually delivering the optimal tick settings. So you can see down here, this is actually on 144, so I need to change that over. Now, the reason there are 2 settings there is because as you can see, they change rapidly. If you're on the actual, you'd be changing this literally second by second by second, which you don't want to do. We're now getting some real momentum coming. You can see it there, just jagged in on green. This also changed. So this number here it's based on, the reason it says fib is because we use fib mathematics to actually take the tick number that was closest to the actual. It's nothing to do with Fibonacci other than we use that particular mathematical approach to arrive at a figure that didn't move around so frequently. So if I change this over, and as a rule of thumb, I normally trade when I'm on, I mentioned Globex earlier on, when I'm on Globex only, I'll probably use the actual. When I'm in cash and Globex in here, then I'll use this one because this will change rapidly. Whereas on Globex only, the actual would change less frequently. So I'm just going to change these over. Just on Ninja, it's a piece of cake, just 55T. That flicks over onto a 55 tick chart. This is now 144. Just change that over there. And this is now over on 377 tick. There we go. So that's that done. That's how quick it is to change them. And the problem with most traders when they're trading on tick charts, and the reason we developed the tick speedometer was for this reason, very simple reason, to actually deliver the optimal setting. Because if I change this to ES, and I'm not going to do it now, but if I change this over to an ES contract, I can assure you these numbers would be huge. They'd be far different to the YM. The YM is the least heavily traded, the ES the most heavily traded, and on an ES chart you'll find values of 10, 15, 20,000 ticks. It's a monster contract. So that's the reason we developed it. You can use this on gold, you can use it on spot currencies, you can use it on stocks, anything you wish. But it gives you it delivers the optimal setting down here all the time. And in addition to that, as Anna said, it gives you this visual on when you get these spikes in activity, it goes green. Generally, it's running in orange, and then you get these red, and it tells you it's running slow. So at the moment, we're running slow, slow, slow. You know, everything's a little bit sluggish, a little bit labored. We want to see it pick up, move to orange. We want to see the 15-second move to orange, 30 in the minute. We want to have all 3 in orange or some spikes in green. Otherwise, we're going to carry on with this sideways price action. Having said all that, the trend monitor here, you can see I've got attached on the charts. It's blue, so it's bullish. The dollar is weakening again, which is good, and the VIX is it's flatlining. It's 1871, so it's not really going anywhere. So there's no real momentum at the moment, but nevertheless, you know, it's a question of you can jump in and out if you're that inclined. I'm not suggesting it's the only way to trade, Some traders are terrified of a 15-second chart. I used it a lot myself, but that's not to say it suits everybody. Let's just have a quick call on gold. Gold is really struggling at $1,800 an ounce. This is the level. We're now on a daily chart, so we've gone to the other extreme. Let's move that over a bit. Let's get that out of the way. There we go. This is the daily chart for gold. We write a lot about gold, we trade gold. This is where we are. This is the level. You can see it here. It's absolutely capped off at 1800. It really is struggling to break through that region. But the good news is, if it does, then going back to the volume point of control, you're looking at, well, and obviously this is a daily chart, but it could be a minute chart, could be any time frame you care to name. This level, this volume area through here, this is low volume compared to this region up here. So in terms of where gold is likely to find it easy and then struggle, is once it gets through 1800, it should move pretty much up to 1840 relatively easily, because there is nothing in the way of price-based resistance ahead. This is you know, these two levels here are tiny. They've only been tested once. You can see the little one over here. So these levels here have only been tested once. They're minor, they're not significant, and therefore they're unlikely to cause any problems for the price to break through. In addition to that, you've got this nice low volume region here. So from a trading perspective, once we get through $1,800 an ounce, and you've got to decide how far away from that level is comfortable for you to get in, but you can be assured that if there is a reversal, you've got some pretty serious support below. But once you're in, then you would expect, all things being equal, that this price move through here will be relatively straightforward, because there's very little price-based resistance and a nice low volume region on the way up too. Volume falls away and then it starts to increase up to 1840. So certainly from sort of 1810 up to 1830, you know, that should be relatively straightforward and wouldn't require quite so much volume to drive it through. And that's really how you analyze any particular chart. Just pop that back up, the old times sales, there we are. There we go. This is on the left-hand side. I'm not going to dwell on this too long, but this is time and sales. This is basically, these are active orders going through the market right now. These are not, this is not the ladder. This is not anticipated orders or spoofing. These are actual orders. These are live orders going through the market. This is all noise level, not really interested in ones and twos. What you're looking for is anything, you can set your own parameters, but anything that is in double figures, anything 30, 40, 50, you know, that's significant. And once you get into three figures, that is hugely significant. And those are the numbers you have to pick off. But I'm not going to dwell on that too much at the moment. I've got that running on pretty much everything. So that's gold. Silver is much the same, but probably more demonstrable in terms of the resistance. Again, do gold and silver generally move in the same direction? Normally, yes. Not necessarily at the same speed, but generally they do move in typically the same direction. Again, you can see just above $27 an ounce. We've got this very strong level on the accumulation distribution indicator. This has been tested 7 times and held firm. So again, if gold manages to break through, then you know that's the point for silver to break through. And even clearer on here, you know, the volume is just falling away right the way up to $30 an ounce. So provided it's got the momentum of volume, provided the buyers are there and there's big volume buying supporting it, and you know it should break away. At the moment, where are we trading? We're trading around the volume point of control here where my cursor is. We've got some very solid support in here on the red dash line and some very solid support in here. You will often find when you have the VPOC running, you will get these channels. And you'll get channels on the 1 minute up to whatever time frame. And it's absolutely brilliant for not only identifying those channels, but once you get a breakaway, as we had here from this particular channeling, I'm not sure whether it was here or not at the time, but you know, let's assume it was. Once it breaks away, you know, these gives you very, very clear areas of where to place your stop loss. It gives you a massive barrier in terms of a retracement. You know, you put your stop loss up here, you're very comfortable with all this overhead. once you start to break away to the downside and equally to the upside as well. So it's just using everything in that you have in multiple time frames and using the indicators in the same way. So that's basically silver. And you know, you're constantly looking at the volume profiles, what's going on. I mean, you look at these two candles here, it's rushed up. Why is that candle twice the size of this candle, and yet we've only got half the volume? Does it mean that that move has come to an end? No, but what it does mean, and you've also got to pivot to the top side, what it also means is, what it actually means is that, you know, there's some weakness there, because if that were true, then this volume here on that particular candle, all things being equal, should be double, more or less. I appreciate this has got a wick to it, so it's not perfect, but you get the general idea. You know, we've had an injection of volume here. We've got some weakness, so we know there's some selling in there. Lots of volume, almost the heaviest volume of the session. That's the heaviest volume over there. So we have some weakness here. Why does this candle suddenly rush up on half the volume or 2/3 the volume? It's anomalous. It's anomalous because the previous candle gave us a heads up that that's what we should expect at this particular point in the session, and we haven't. We've got this. It's completely anomalous, and therefore from a trading perspective, is it any great surprise we see this? And the answer is no, that most traders wouldn't be aware of that because they don't apply volume. So that's the beauty of volume. Not only does it tell you, it gives you heads up as to where to get in, it confirms moves, but it also gives you that confidence to answer the question that, oh, why did that happen? And you're actually doing it from an analytical perspective. You're not doing it from an emotional perspective. That's the power of VPA, or one of many of the powers of VPA at any rate. So I just picked that up. It's a very simple example. You do get quick at doing this analysis, and certainly if you're on the 15 seconds, you've got to be quick on your feet, but it certainly teaches you how to apply VPA. And if you've got a 15-second chart, most trading view I know does, not so much on Mt5. I don't think they go down to seconds. TradeStation, of course, has got seconds. Ninja's got seconds, and what else? TradingView has got seconds also. But you start to look at things, you know, very rapidly. You start to assess things very rapidly. You're constantly looking at what is going on. On this one, for example, we had two little down candles. The volume there was falling. You know, it's tiny, but these are the things that just give you confidence to answer that question. You know, what is happening here? You look at these two candles here. You've got two candles which are pretty similar in size, not very big. Volume under one, not much under the other. Is it going very far? Probably not. You know, then you put everything else together. That's how we do it. It's not for everybody, but it's you know, that's what we've done for nearly 20 odd years, and it works for us, and hopefully it will work for you as well. Let's have a quick call on oil. I'm okay, thanks, darling. Let's have a quick look at oil. Okay, nice trap move there. What we're looking for, you know, lots of volume, big volatility candle, bang, all the traders jumping in there, fear of missing out. Let's go short, bang, off we go, off up the other side. When you see volatility, what you're looking for is high volume, because that tells you that the big operators are in there, or the market makers are in there, they're playing, they're gonna trap you. Just be aware. I've said this so many times, if you're in a trade and you get a volatility trigger and you're in profit, close out. Or if you have multiple contracts running, if you've got 4 or 5 contracts running, take 4 off the table, leave 1 to run, perfectly fine. Scale out of the position, absolutely no problem at all. And the reason is because, do you want to sit through either congestion or reversal? And the short answer is no. If this market carries on, if this collapse have continued, this price waterfall, and it carried on lower, you just jump back in. Once you've cleared this level, get back in again. Fine, what have you lost? Okay, you've lost a little bit in here. You've maybe lost, I don't know, 10 cents on the barrel or whatever it is. But so what? Would you rather lose 10 cents on the barrel, or would you rather sit through a congestion, or worse still, be stopped out on some decent profit? It's as simple as that. Now we're coming back up here. You know, where is this trade going to take us to? The trend monitor, you can see is transition. We've gone, and this is a classic phase of price action. But you can also see, I haven't got the trend dots on here, but if you had the trend dots on here, they would have already changed. Obviously, what you're seeing here is the is the considered reversal of the trend monitor, which is why we stress you have to use this in multiple timeframes. Don't use it in one time frame. Use it in 3, 4, whatever. It has to be 3. I would suggest 3 minimum. And that is the traditional, that's the classical change in color from bright red, dark red into dark blue, out the other side into bright blue. Where is this trade going? Well, we're going to hit some resistance now. We've gone through this little low volume region. We went through that pretty swiftly, which is what I said. It would happen, it should happen because you've got low volume. Now we're coming up to the volume point of control, which is oscillating around this region. 1.5 tons of volume sitting here. Just pull it back. That's how far we are. So you've got 2 strong reasons. First of all, you've got the VPOC. Is this move going to just slice through there with ease? Answer, no. Sorry, click that off. Secondly, even if it did, it's going to struggle at this level because you've got price-based resistance at 66.52 per barrel, and therefore you've got 2 reasons where this market is really going to struggle, or this piece of price action is certainly going to pause and congest, if nothing else. That's the power of the volume point of control. It just gives you that information straight off the bat across all the time frames, and it doesn't, we're on a 1 minute, but it could be anything, could be an hourly, could be a daily, whatever, it makes no difference. We've got a bit of weakness coming in there, no great surprise, decent volume under there, wick to the upper body. Is there selling in there? Yeah, of course there's selling in there because we've had this decent rally, a lot of profit taking now coming into play, and we're approaching the volume point of control as well, so we expect congestion. And it's not a trade that we're going to jump in as a scalping trade and think, oh good, this is going to go to the moon. Having said that, that's on the 1 minute. Now you go down to the slower time frames and see what they're telling you. As I said earlier on, time is the governing factor because it carries weight. Here we've got this massive volatility candle. You can imagine all the traders jumping in there thinking, whoopee, nice easy money here, we'll go short on the oil, bang. Now they're all stopped out or taken out, one or the or they've closed out, one or the other. Nice reversal to the upside. Look at the volume falling away under the rally though. We're coming up here. We've also got another strong level over here. So we're trading at the volume point of control on 3 minutes, and we've got strong resistance overhead at 55. And if we go down to the 5 minute, is it a good opportunity? No, from a scalping perspective at any rate. Because we've got the volume point of control again, and we've got another strong level, even stronger level on this one. Now what you'd be looking at is you'd be looking at it from a different perspective. If you weren't in this particular trade, you'd be saying to yourself, right, okay, I've got these very strong levels. I've got 2 of them. I've got this and this. If I'm going to take a trade, I'm going to wait for it to break to 66.60 or maybe 65, because once it gets to 65, I've got nothing on the chart. Nothing at all. I haven't got the other time frames, but basically you do that process, you go up to 10 minutes, 15 minutes, so on and so forth, right the way across your time window, and you would come up with your, you'd either decide you were going to get in, or you would decide you were going to wait, and if so, if you're going to wait, what price levels were you going to set for yourself to trigger, if you like, your entry point, and then of course you've got to decide on your exit point, and that comes down to looking at the chart from the other way as to all the other aspects of volume and price. What have I got in terms of levels, etc., etc., etc. Excuse me a moment, I'm just going to clear my throat. Sorry about that, didn't do that on microphone. Right, let me just, I've rattled on. Let me just pull up the chat box. Right. Thank you, Sultan, much appreciated. I'm glad you're enjoying the books. Countries, we are in the UK at the moment. Right, let's scroll back up. That was Chris. Jerry, if trading with a small account, what time frames would you suggest for trading intraday swings? It doesn't really matter on your account size because let me think about how I'd answer that. You really have to trade. If you have a small account, it goes without saying that you have to trade the smallest contract size that is available. Let me answer it from a Forex perspective because it's probably easier to understand. In the Forex world, if you have a small account, you go down to trading micro lots, which is the tiniest contract. A micro lot is a tenth of a mini lot, and a mini lot is a tenth of a full lot. So you basically you use the smallest contract size possible. But in using the smallest contract size possible, it doesn't automatically equate that you have to trade a particular time frame or a particular way. It doesn't mean you can only ever trade intraday, because if you trade very small size, you can still have large stop loss positions because you are trading small size. They allow you to trade longer term. So it doesn't really work that way. What I would suggest is if you have a small account, then you have to find what suits you. The problem that you will have in the futures market, at any rate, when you talk about, well, there's two issues. One in particular, with small contract sizes, there are micros. In fact, there are more coming all the time. There are micro index contracts, which I have to say are a lot more fluid than they used to be. The bigger problem is in liquidity, because they are not so heavily traded. Having said that, the micro indices contracts are pretty heavily traded, so the price action is smooth. The sort of price action you see here is smooth because they are heavily traded. If you look at certainly, it used to be the case with gold, for example, with micro contracts on gold, they would be very spiky. So the price action you would see would be very spotty. And what you would see on the chart, you'd see the price spike to somewhere and then sit there maybe for a minute or a minute and a half, and then it would jump somewhere else. So you wouldn't get that smooth price action. So that's the downside of micro contracts. Having said that, as I say, they are increasing popularity. If you head out over to the CME, you'll find them all there. I can't remember when the micro contracts came out. I think they came out a year or a couple of years ago, but they have been taken up big time. So they will trade in very much the same way. But to answer your question, I don't think there is what time frame suggests. There aren't really any. You have to find. It's more important that you find out what you're comfortable with. If you're not comfortable trading with these fast time frames that we have here, don't worry about it. Move down to a slower time frame that you're more comfortable with. It also depends if you have time to sit in be in front of a screen all day long, which we do. Obviously, we're very privileged, we're very lucky, and we also have, we're in the Northern Hemisphere, so we have access to the best times to trade. But as I said earlier on, if you're trading on Globex, don't worry about it, because I think Globex, the price action on Globex is pretty smooth. And in some ways is more straightforward. I wouldn't say it's easier, but it's more straightforward than when the cash and Globex are running together, if you're talking about indices. So I'm not sure if that answers your question for you, but I would look at it the other way around. I would look at it from what suits you temperamentally. Don't force yourself to become a scalping trader if it doesn't suit you temperamentally, because you will struggle. A lot of traders would be horrified, as I said earlier, at trading these sorts of time frames, and you then have to find what suits you. So that's more important than the actual account size, to be honest. Hope that one answers that one for you, Jerry. It's an interesting question, so thank you for that. Let's just drop the chat box out of the way. There we go. So this is where we are with oil. Let's just have a quick look before we round up. So there we are, we've got through there. Volume is falling away a little bit there. We're now hitting this resistance here. So, from a scalping perspective, you'd be looking at this opportunity saying, well, I've got this below, I've got this above here. If we break through here and maybe get through up to 60 odd, then, we could be on and on up we go. So you set your levels accordingly and wait and see what breaks, and you just have to be patient. As always, patience is the key in this business. There we go, similar sort of thing setting up there. Once you get through here, who knows, on upwards. But it is a question of being patient. So have a quick look at where the indices are, whether they have actually recovered. They are trying to recover, getting back up a little bit, a lot of congestion, that's on the daily. We're trying to break up here. We're back at the VPOC on 5 minute, we're back at the VPOC on 5 minute with YM. lots of resistance overhead at the volume point of control, and lots of resistance overhead on the ES as well. So, you know, it's going to be a bit of a struggle. VIX is dropping away, 1854, so, you know, that's helping. And the dollar is kind of going sideways, but it's not roaring up, so that's also helping as well. So there we are. I'm going to wrap up. Been going a long time, so thank you very much indeed for coming along. Just to point you in the direction of where all the bits and pieces are, you'll find everything over at Quantum Trading. These are the platforms: Mt5, NinjaTrader 7.8. And remember, on NinjaTrader 7.8, it is the same license, so you don't pay any more. It's a single license. It covers both versions of NinjaTrader. So, and you have the option. You can choose either. You can switch between the two. Do what you want with it, and that's fine. And there's the Essentials package there, which we've developed particularly for intraday trading, as we've been doing today. And then you've also got the full package, and the full package basically includes the currency-specific indicators of the currency strength, the currency array matrix, and the heat map. And that's why we split them out into the Essentials and the full package there. Trading View, we will be updating that. We should be launching all the relevant all the indicators which are missing on there. They will be available in, I'm hoping, we're working on the support pages literally this week. I'm hoping that's going to be available latest end of next week. So if you have the full Trading View package and you've purchased that in the past, or you're going to purchase this week or next, you'll get all those extra indicators free of charge. Thereafter, the price of that will be going up to be aligned with the MT4 package. TradeStation, we've got both packages. We've got TradeStation Global, which is on 9.5, and TradeStation Securities on version 10 and above. So that's where we are at the moment. Lots more to come. We're always working on other indicators as well, as I'm sure you know. As I said this morning, if you do invest, if you have invested in our indicators, and you upgrade to something else, we always give you a full credit for whatever it is you've purchased with us. So and you can always transfer as well. There's no cost of transfer, unlike some companies we know of who charge their customers ridiculous amounts of money to transfer from one platform to another. We don't. It's free. So if you want to, as your trading develops, if you're on one platform, we have a lot of customers who move from MT4.5 up to NinjaTrader, for example. We have customers who migrate from NinjaTrader to TradeStation, from Trading View back to, and so on and so forth. There is no cost to it whatsoever. The only cost is if you migrate to a more expensive package, there may be additional indicators which you need to purchase, but other than that, we don't charge physically for the cost of transfer. This is the Forex program, complete Forex trading program, and we've now bolted on the funded Forex program as well. You trade our money up to $2 million. So there is no risk to you. And the reason we bolted that on was our students on the program actually get to put that knowledge into practice. And I have to say, we've got a lot of stock traders on this program now as well, because the market in general is starting to appreciate the Forex market sits at the heart of everything. It sits purely because cash is king. And when you convert one asset to another, it has to go through cash somewhere or the other. And that's why the Forex market is the hub around which everything else rotates. So we do have a lot of stock traders. It's a deep dive into VPA, lots of stuff which is relevant to all markets. Yes, there is a focus towards Forex, but in terms of sentiment and everything else you learn in there and trading in general, it's all to do with trading whatever market you choose. Finally, that's Anna's site, annacooling.com. We find all the books there up on Amazon, Kindle and paperback, and all the links to all the sites. That was the video from this morning's session, so that's already gone up. And these will be posted up on YouTube as well. Just make sure there's no more questions. I think I've answered everybody. Great, thank you very much indeed. Enjoy the rest of the trading session and enjoy the rest of the trading week. We will be back next week as usual. So thanks very much indeed for coming along today. See you soon and bye for now.